Hey, what's up, everybody? Tuesday, March 23rd. Bond yields coming back down, just like I said was going to happen. 10-year Treasury at 162. Folks, think about this for a second. Banks, commercial banks, in the 6 weeks ending March 10th, sold $54 billion in treasuries, and that was one segment of the treasury market. It was T-bills, right? Banks have like trillions in treasuries, okay? 3.9 trillion in treasury and agency securities that they hold. They sold 54 billion in that 6-week period, all right? Small speculators sold 21 billion, went short, not just sold, went short, have a short position of 21 billion. So like small speculators, you can't compare the two. You're talking about all commercial banks in the United States sold 54 billion. Small speculators have a short position of 21 billion in the futures market. So you decide. Anyway, a couple of things on the bond yield situation. I told you yields were going to come down. The whole hyperinflation thing was ridiculous. A little inflation because of, and it's not even inflation. Let's have the definition. Inflation means constantly rising prices, not a one-time rise because we're in a pandemic and you have supply disruptions. All right, that characterizes the situation that we're in right now. Inflation, real inflation, is constantly, steadily rising prices that just keep rising and rising and rising. All right, a one-time price increase based on, current conditions. We're in a pandemic. Sorry. Now, you might want to call that inflation, and I'll grant you that. You can. But to go and say hyperinflation, and a lot of people were selling on this nonsense. Remember that guy, the Big Short guy? I did a video here, Michael Burry. Nonsense. Talking about, okay, this is my last warning. You better pay attention. I'm out of here after this. There's going to be hyperinflation because everybody's getting a little peanuts $1,400 check. I mean, it is beyond ridiculous. Oil down another 6% today. Oil at 57 bucks. It was a week ago. It was at 65 bucks. It's at 57 bucks, and I told you it was going to come down. That's not hyperinflation. That's not even inflation, okay? Bond yields coming down. I got to say this about Powell, because I don't give the guy a lot of credit, and frankly, I don't think he deserves a lot of credit. But at least this time, he did not kowtow to the market. He did not genuflect and cave in to the so-called bond market vigilantes. When bond yields were going up, he stayed cool. He didn't jump, everybody screaming, you're going to have to raise interest rates, you're going to have to raise it. No, he did that back in December 2018 and all of 2019. Remember, we had a little stock market correction in December 2018, and he panicked. Remember, the Fed at that time, they had been in a rate hike mode, and he's like, oh, we can't do this anymore. And then right away in March 2019, they started raising rates again. I mean, they started cutting rates again because he panicked. He was looking at the market and he panicked. At least this time he didn't do that. All right? So I got to give him credit for that, because he's not the kind of guy who, to me anyway, he's not the kind of guy who displays really strong leadership. He's a lawyer. I mean, he's not an economist. I mean, not that that makes any difference. Let's face it. He's a lawyer. He's a securities lawyer. But, at least this time, he didn't cave in to the so-called bond market vigilantes. And I've been saying, look, there's only so much the long end can rise because it's a reflection of Fed policy over a period of time. And the Fed keeps saying, hey, we're not raising rates. I was the one that said to you, if the Fed came out and said, we're going to raise rates, I said, go short the bonds. Have fun with it. Go short the bonds. Go crazy shorting the bonds. But when they're not raising rates, come on. And then this whole story about hyperinflation, a little bit too much. Let me talk about the dollar. The dollar is in an upward counter trend correction. In other words, it's in a bear market rally. Same thing I've been talking about every single time we get a rally. And now, you got all the headlines, king dollar, dollar this, dollar that. There's nothing but the dollar, the dollar, the dollar, the dollar. Folks, do yourself a favor. Understand that the dollar is in a slow, meandering downtrend. That doesn't mean you can't make money, buying the rallies. I don't like to, let me put it this way. I don't like to, confuse my strategy. Like, I could see this coming in advance. I don't get out of my dollar short and then, hey, let me go long and try to capture this, and then I'll get short again. I'll try to get back. No, I just stick with it and I manage it. That's not to say, you can't try and catch these counter trend moves. I mean, look, the last one was like 2 years, all right? So, I mean, you might say, hey, Mike, you left a lot on the table. Yeah, but you know what? I have my way of doing it. I stick with the big picture, and like all my strategy is designed or designed around that big picture. It doesn't mean like, you might want to play these little counter trend moves. For me, it creates some stress, some unnecessary stress. I'd rather just focus in on the big picture and then, strategize accordingly. All right? So I'm selling the rally. Moderately. I mean, as it goes up. Dollar index today, what, at 92.30 or something like that. I think I said a few weeks back I could go, or I may not have said it on a video, but I sent it out in an email to my subscribers. I said like maybe 92.5, 93, low 93, something like that. Paying attention to that. But the main thing here, if you want to talk about stocks bottomed out. The correction bottomed out in early March when they passed the stimulus. Stimulus checks are going out. Headline fears today. Today was another day of headline fears like, we still got virus situation. I mean, Europe is again in lockdown, and cases in some states here, I think I read like almost half the states in this country are experiencing a new upsurge. So it may have to slow down reopenings and stuff like that. So that's headline fears. I mean, we've been dealing with this, for a year now. But economy's coming back slowly. Stimulus is in place. And Biden now proposing a $3 trillion infrastructure. I mean, if that happens, man, if that happens, $3 trillion infrastructure, universal pre-K for kids, environmental investment. I don't know the whole, all the points of what is being proposed there, but the main thing is a $3 trillion. I mean, we need that badly, and that would, if that happens, I mean, if we get that, you're looking at China growth rates here in the United States. You're looking at 5, 6, 7% GDP growth rate. You're looking at a Dow Jones at 50,000 at least. But we'll see if that passes. That's it for today, folks. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I'm the only one who has an applied approach to MMT. And also, let me just remind you, I recorded a new podcast today, and it'll be out tomorrow. Have a good one. Bye-bye.